How much home can you afford to purchase with a $50,000 per year salary with the least amount of down payment out of your pocket? That's what we're going to dive into in today's video. Now, I know a lot of you are watching this from high cost states like California, where I'm located, going, Jeb, at $50,000 per year, I can't afford to purchase anything because house prices have gone bananas. I get it, but understand you can use the same calculations in this video with your income to determine exactly how much you can afford to purchase in your market. But hang tight, because I'm going to do a series of these videos with higher salaries and higher loan amounts so that you know exactly what you can afford to purchase in your market. But the first thing I want to tell you is this video is for educational purposes. If you're looking to purchase a home, you need to get pre-qualified with a lender. Do not use this video as the end all. Don't use your own calculations and then start to search for properties. It won't end well. Make sure you talk to a lender, have them analyze your income, your tax returns, your W-2s, along with the debts on your credit report to determine exactly how much you can afford to purchase. Once you have that amount, then go looking for homes. Now, if you don't have a lender, do me a favor, click the link in the description below. I'll set you up with a lender who does business the same way I do, somebody I know, like, and trust, and can guide you in the right direction. So the first thing that's going to happen when you start talking to a lender is they're going to ask you for a copy of your tax returns, your W-2s. They want to see and analyze how much income you make. And for this video, we set a $50,000 per year salary. So what they're going to do is they're going to take that and they're going to divide it by 12. Why are they doing that? They're trying to figure out your gross monthly income. Now, I said gross. That is without taxes. So they're going to use your income without taxes in order to determine how much home you can afford. So that $50,000 per year breaks down to $4,166 per month. Now that they have your income, they want to see your debt. So what they're going to do is they're going to pull the debts that report on your credit report. These are things like your car payments, your credit cards, maybe your student loans, maybe you have an installment loan or some other type of loan with furniture. Maybe you pay child support or alimony. In those cases, they're going to calculate those as well. That's why you need a lender to analyze this information. But for purposes of this video, we're just going to assume that you have 3 monthly debts. We're going to assume that you have a car payment at $300 per month. We're going to assume that you have a credit card where you pay $50 per month, not a $50 balance, but that you pay $50 per month on that balance. And we're also going to assume that you have student loans. And the student loans, we're going to assume that you have a $100 IBR payment, so that all you're paying per month is $100 on those student loans. So $450 a month. Now, for purposes of this video, we did an FHA loan. 1, because it allows a minimal down payment, and 2, it allows the highest debt to income ratio with regards to qualifying. They allow you to use more of your monthly income to qualify for a loan when using an FHA loan. And we're going to max it out and say 57%. So we take that $3,716, we multiply it by 57%, and we get a max qualifying payment of $1,924.62. Now here's where it gets a little bit tricky, because you have to work backwards to figure out what your payment would be at per month. Now, you might be watching this video and go, Jeb, I make $50,000 per year, but I can't afford a $2,118 payment per month. Completely understand that. And that's why it's important for you to set a budget prior to ever talking to a lender. Make sure you go through that process, because a lender is going to qualify you for the max amount that you can afford to purchase unless you tell them otherwise. Now, if you go in and you tell them, hey, the max I want to pay per month is $1,750, they can work backwards and tell you how much home you can purchase from there. But if you go in without telling them a max, they're going to say, hey, this is how much home you can purchase based off your income and your debt. And in this case, it would be $1,924.54 Now let's figure out how much home you can actually afford to purchase based off that max qualifying payment of $1,924. Because I have experience in lending, I'm no longer a lender. I'm a real estate professional now. Was a lender for over 10 years. Understand the business very, very well. But I'm working backwards in computing these numbers. So what I did was I did a couple of calculations, and I started with a purchase price of $350,000. So $350,000. The first thing we have to do is determine how much you're actually financing. So at $350,000 using an FHA loan, which requires a 3.5% down payment, you're actually going to have an initial loan amount before the upfront mortgage insurance premium of $337,750. Now, once we have that amount, we multiply it times 1.75%, which is the upfront mortgage insurance premium amount for an FHA loan, and that comes to $5,910. We take that and we add it to that $337,750 base loan amount to get us an actual financed amount of $343,660. Now, you're probably a little confused with that. Why are you putting 3.5% down and then adding 1.75% to it? It's because FHA requires an upfront mortgage insurance premium. And so you have to add that back onto the loan amount after you do your down payment to figure out exactly how much loan you're going to be financing per month. So now that we have that $343,660 amount, we have to figure out where the interest rates are today. Now, I spoke to my lender here locally. He gave me the interest rates today based on an FHA loan at 2.25%. So what we have to do now is we have to determine how much your monthly payment is. And we have to take that monthly payment, we have to factor in your property taxes, we have to factor in your homeowner's insurance, we also have to factor in your monthly mortgage insurance. Because you're using FHA, there's also a monthly mortgage insurance in addition to that upfront mortgage insurance that you paid. So we have to use all of that and calculate our payment to figure out exactly how much monthly payment that is to see if it fits within our budget that we allotted at the beginning. So we have a financed amount of $343,660. We multiply that times 2.25%. We amortize it over 30 years, and that gives us a payment of $1,319 per month. Now, for property taxes, what I did was I used our local property taxes at somewhere around 1.1%. Now understand, depending on where you are in the country, if you're in a state like Texas, being 2%, your property taxes are going to be significantly higher than the amount that I'm using here. And that's why you can't use these calculations exactly to determine your situation. But for this situation, at 1.1%, we multiply that times the $350,000 purchase price. That gives us a tax amount of $320.83 per month. Then we have to factor in our mortgage insurance. Now, mortgage insurance is 0.85% of the amount financed. So we take that $343,660, we multiply it times 0.85% and divide that by 12, and that gives us a monthly mortgage insurance of $243.42. Now, we still haven't taken into account our insurance. How much insurance do we need on a property like this? Now, depending on where you're located, if you're in an area that has hurricanes, if you're in an area that has a lot of natural disasters, this amount might be considerably more than the amount that I'm going to use here. But I'm going to say that your insurance is going to be around $600 per year, which is going to be $50 per month. So all of that added in together, your mortgage at $1,319, plus your property taxes at $320.83, PMI $243.42, and your insurance at $50 per month gives you a total monthly payment of $1,933.25. So that fits within that budget of $1,924.62. That means at a $50,000 salary based on the debts that I had there, using the taxes, use the estimates that I had, that you could actually qualify to purchase a $350,000 home using an FHA loan. But at the beginning of the video, I mentioned why it may not be smart to purchase a home using an FHA loan if you can actually qualify based on the information that I just provided. And that's because we did it at a 57% debt to income ratio based off your gross monthly income. So that was your gross monthly income without any taxes taken into consideration, without any of your other expenses taken into consideration. We didn't factor in how much you spend on gas, how much you spend at the grocery store, how much you spend on babysitting, on going out to dinner with your friends, any of that information. And so 57% of your gross monthly income is a lot of money to spend on a mortgage payment without factoring in anything else. So make sure if you're looking to purchase a home, you're going through the process, setting that budget to determine exactly how much home you can afford before you start that process. But if you want to know exactly how much you can afford, talk to a lender, have them analyze the numbers, have them run the numbers for you, and they can, give you, a full pre-approval and tell you exactly how much you can afford based off your scenario and not using my calculation. And again, if you need somebody to do that, hit that link in the description below, and that will put you in touch with someone who can guide you in the right direction. And if you're looking to purchase a home and you're wondering about FHA qualifications, how it works, what else do they need for FHA, what do they need for credit score, what do they need for monthly income, all of that information, do me a favor, hit this video here. This is the FHA guidelines for 2021. It goes over all the FHA requirements that you might need to know. So check out this video, and that will give you a better idea of where things stand. But if you have questions for me, do me a favor, comment below or reach out to me directly. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.